Afternoon, everybody. My name is Tom Miller. As Greg introduced me, I'm the Senior Account Manager for Radian. I cover the Waco, Austin, and San Antonio markets. And I'm joined here today by Jill Love, who's our inside sales rep. And she helps a lot of you. You may have had the opportunity to hear from her and actually both of us before on some conference calls. I know we actually did a training a couple months ago now about on the Home Ready product. But I appreciate the opportunity to come and visit with you guys today and tell you about some things. Jill's passing out some handouts for each one of you. And the first thing I wanted to talk about was our new rates that actually roll out today. If you haven't got an email from us, email one of us and let us know to make sure you got you on your mailing list, because we'd like to be able to reach out to you and tell you some exciting things like this. And you can tell our rates are on fire. So we're pretty excited about this. Radian has gone through, and several other of our competitors have as well. We've gone through a little bit of a knife fight where we've all gone through and changed our pricing, and we've all finally stepped out of the room together and kind of agreed on what the new rates are, it looks like. So to kind of summarize it up for you, at least for the borrower paid monthly rates that you all be receiving a copy of, 720 is kind of the new demarcation line for what the new rates are, kind of what's changed the most. 720 and above has gotten better from the old rate sheet, and quite a bit across the board, from 97s all the way down to 85 and less. You'll see a huge pricing decrease for those borrowers. And for 720 and below, all the way down to 620, pricing is not as good as it used to be. We've all kind of agreed to more of a risk-based model. And does anyone know what the average FICO score is just across the country on the conventional side for a loan that needs MI? What do you think the average FICO score is? Or where do you think a big bulk of it is? 700? 680? Well, at least 40% of the market was at 760. But the average is about that right above 720. So there's a huge market for that 760 plus borrower. And that's why you see the new rates are rewarding those borrowers, and that's where a big chunk of the market is. And being insurance companies like Radian and our competitors are, we fight quite a bit for that market, as you can understand why. So that's just something that you guys know about, at least first off. Let me see if I can get to the rate card too. Awesome connection you guys have. That's fantastic. I mean, some of the highlights I wanted to hit off, especially for 97%, that Jill's going to take a second and tell you guys about the Home Ready product, but especially wanted to just highlight it. Take a look at the 760 FICO score at 95 and up to 97. A 0.55 is the factor for that, which is really incredible considering that we used to be, just yesterday, we're at 1.05 for that same rate. So over a half a point difference on that. Some of the other things that I wanted to let you guys know about that I wanted to see if I can pull up. I got the chance to do that. Well, everyone should have got a copy of this. The next rate sheet down below in this handout for you guys is the borrower paid, split edge borrower paid rates. Oh, darn it. Can I see a show of hands of who's done split edge before? I see one, two, a couple. All right. Split edge is a product that's been around for a while. Typically what it's been known for is for helping those borrowers that, especially in you, if you have a situation where the borrower's trying to, you're trying to thread the needle and you need a specific DTI requirement that you're trying to meet. What split edge allows you to do is kind of operate on just like the FHA premium does. You can have a half a point up front, and then you have a monthly premium. You can have 3/4 of a point up front, then a monthly premium. And as you escalate the upfront premium, the monthly premium decreases. And it goes all the way up from a half a point to 1.75. So at that 1.75, you can imagine that the monthly premium is very low. At a half a point up front, it's not as big of a difference. But with the new pricing structure that came out for monthly, split edge becomes much more attractive and can be a much better option for you. Especially with at least a 1 point upfront option. If you take a look at that, the 1 point upfront on even at a 620 to 679 FICO score, you're looking at 0.93 for your monthly premium. So compared to the new monthly rates of a 620 to 639 on a 95, you're at 1.61. So quite a significant difference there for your borrowers, being something great to be able to take advantage of and something to be able to offer them. That 1 point though, or any of those, the half a point, 3/4 of a point, 1 point, has to be considered in your QM calculations. So when you're doing that, just make sure that you have enough room to be able to finance that. If you're willing to pay it, or even if the borrower is willing to pay it, it has to be considered a QM option there. So be on the lookout for that, but that could be definitely something, at least another product that no one has used. Only 2 people in this room used it. I've been talking about it a little bit earlier today, and no one's really used it. I see a hand. Split edge can't be financed like rolling it into the loan amount, but you can pay for it out of the yield. Yeah. As long as it works with QM. Yeah. Any questions on that, on split edge? But hopefully that's something that really, to give you guys another option of something else to talk about, because everyone else is only going to be talking about monthly. Split edge will give you something definitely that can definitely compare favorably for your borrowers to be able to give them a new option. And then I'm going to give Jill a chance to come on up, Jill. We'll share the mic. The max is still 90%. Yeah, that hasn't changed. See another hand.
You mentioned earlier about the rates. I've always thought that all MI rates are exactly the same. Is that correct?
You mean across competitors? Yeah. Yes. Well, right now they are, pretty much, yes. The main companies that aren't using risk-based pricing are all pretty much the same. Risk-based pricing can vary quite a bit, and they have many more factors out there. So particularly we call it the kind of black box companies. If they're using a black box, you don't really know everything that's going into the factors. We kind of have some ideas of what they use, but sometimes I've had loans be priced differently for a client just because they have a single unmarried borrower gets worse pricing than married borrowers. Self-employed borrowers get priced worse than salaried borrowers. Those are all factors that we don't have. The only factors that we have are the ones that you see on our rate sheet there. We have, you know, loan to value, FICO score, and then the other couple of minor little factors there, like, you know, if it's a cash out, if it's investment property, manufactured housing, second homes, kind of basic, your basic typical hits. But black boxes use a lot more and can throw things off quite a bit for you. So these make it more stable. You can bet on these rates, you know, when you quote it up front, and it's not going to change for you on the way through closing. Does that help you out with that question? Good. Any other questions on pricing? Jill and I are going to bounce back and forth here for the last couple of other little pages here for you guys. All right, good.
So one of the sheets that Tom dropped off to you all was about Home Ready. How many of you have had a chance to jump on either one of our webinars or maybe another investor's webinar on the program? 3? 4? All right, well, we've been doing quite a few of them. The head of our secondary department has been holding monthly webinars. I actually have another one coming up on the 19th, so if you're interested in jumping on, he goes through the program. It's basically Fannie Mae's replacement for the My Community program. However, it does have, if you're familiar with that program, it did have a couple of stipulations. With the current Home Ready program, it is not just a first-time home buyer program any longer. So the borrower can have owned a property in the past. They don't have to be just a first-time home buyer. So that is one of the big changes with the program. In addition to that, the pricing that they're offering on any loan that is above an 80% LTV, and I believe it's a 680 FICO, there are no loan level price adjustments. So pricing on Home Ready versus their standard 95 is going to be quite a bit better. In addition to that, the MI rates factor on a 95 or a 97 is dropped down to 25% coverage. So normally with, say, a 97 LTV, your requirement would be 35% coverage. So you're actually getting a pretty big deduction as far as that's concerned. So again, another good thing for the borrower. There is some training that is required. They have to go through Fannie Mae's framework program, but you know, that was something that's built into the program, but it's probably not anything too bad for them to go through anyway. Other than that, trying to think if there are some, it is census tract driven. So one of the things that I've been doing with lenders is showing you how to use the Fannie Mae tools that are on their website. So you can actually pinpoint different areas within your market, find out if they are in the no income limitation areas, and then you can actually work with the realtors that are in your market and show them these properties that they currently have listed. So I've been doing comparisons side by side, working with Zillow, as well as Fannie Mae's site to show you how you can kind of do a side-by-side comparison and find those properties. And the cool thing about it is you can, use the cursor, move yourself all the way around. You can really kind of hone in on those areas, and it has been very beneficial. I had a lady in an area, I think she was in Houston, and as we were going through the presentation, the home I happened to kind of just picked up happened to be listed by the realtor that worked in her office. So it was a nice in for her to go right over to that realtor and say, this is a program. Someone else just asked if they could get some information, or possibly they want to try and market this to actually right out to the borrower. Fannie does have marketing materials that you can customize out on their website. So, and all you have to do is create an account. You don't have to do anything special. I did it the other day, so I have my own account. I could go around and play with that as well. Can I skip on to Mortgage Assure? Okay, I'm going to bounce ahead just a little bit, because this is another thing that you can use with this Fannie Mae's program. I think it's the last sheet. Yes, it should be the last sheet, called Mortgage Assure. Two little boys at the top holding the barbell. This is something free that Radian is offering. Nobody else is doing this. Any loan that's above a 95% loan to value, and it does not have to be just home ready. It can be any loan that's above 95. We are offering free job loss protection. So with that, your borrower, for the first 2 years of their loan, will be protected in the event of involuntary job loss. They can't just quit. It has to be involuntary. We will pick up to 6 months of their mortgage payments. This is no cost. There's no price adder, no rate adder. You actually don't have to do anything at all. We take care of everything once the loan has closed. So again, this is something else. We have flyers that you guys can customize. You can, again, share them with your lenders. Get yourselves out there, market it. It works great along with the Home Ready program as well, since it is a program that is kind of geared more towards the 97s. And with the better pricing that we just announced, it just should be a win-win kind of all the way around. See, anything else on there? I think I hit the... Home Ready is income driven. They basically have three designations: 80% of the AMI, 100, or no income. And surprisingly enough, there are quite a few census tracts, and more than we thought, that were actually no income limit areas. And they have there's an Excel spreadsheet on Fannie's site. You can actually go in, say you're in Texas, but well, say you're in Texas, say you're in Austin. You want to just pick out Travis County or Williamson County. You can drive it all the way down to the county level, and then further filter out all of the no income areas, so you know exactly which ones are. Now, it's a little work, because then you have to kind of go back and forth and play, but depending on your market, if it's a smaller market, it's not that hard to do. And I'd be happy to help anybody who wants to play around with that.
Is that only for 95%?
Nope. Nope. It can go all the way up. It can go all the way to 97. You're going to get, as far as rates are concerned, you're going to get more of a benefit on the higher ones because the MI is reduced. But you can do it 80, 85, 90. I mean, that part is open. Oh, I'm sorry. You're on Mortgage Assure. Sorry. Mortgage Assure only above 95. Mm-hmm.
Has anyone done a Home Ready loan yet?
We don't have that yet.
Yeah, typically, I've seen at least a quarter better. I've seen a quarter better in rate from some of my clients that have done some Home Ready loans. I had one loan officer that didn't expect to get Home Ready. He had it in his findings. He was doing a not regular 95% loan, but the DU findings recommended that, hey, this loan may qualify for Home Ready. You may want to check it out. He dove a little bit deeper. We just done a Home Ready presentation for him. He typed in the address to the property. It was in a no income limit area. After checking into that, he was able to realize that he gave 25% coverage, had a quarter better rate for the client that was buying this property, and all they had to do was a $75 course through Fannie Mae, and they got that done. And the borrower was incredibly happy, and so is the realtor, especially once they found out that area that they've been marketing to is now a no income limit area for home ready. So it's really good product. I see a hand.
It depends on which census tract you're located. It's different throughout the country.
Similar to like USDA, but yeah, it's all Fannie Mae on Fannie Mae's website. You're able to go to the website, and we have, if you'd like more information on it, we could email you the link on Fannie Mae's website to show you where that is. We have a PowerPoint presentation we could actually send over to you about it. Scott. Okay.
Oh yes.
Yeah, you could use it for realtors. It may be a little bit more, it dives a little bit maybe deep for them, but you could probably just skip to the highlights that you want to talk to them about.
I can help you scale it back too.
Yeah. I saw another hand.
This is a second question for Radian. Do you guys have any products that have automatic expirations for deadline? Or, like used to be a 78% it automatically drop off or things like that? You guys have those expiration points when they need your products?
Well, all of our products have that by law. If you go by the regular normal amortization of the loan, if it's scheduled, a normal amortization schedule at 78%, it would drop automatically. So that doesn't take into account appraisals increasing. If the appraised value increases, it's just the regular amortized scheduled amount for it to hit 78%. All of them drop. Yes, it's probably our most often asked question, but I'll hit that for you. The way that works is if as soon as the loan, I'm sorry, let me back up. The appraisal, if it's sent into the servicer, that's who really is our customer. And they make the decision as to when the mortgage insurance is dropped, not us. It really comes down to talking over with the investor. If you're trying to do it solely based off appraised value only, then you're most likely going to have to wait at least 2 years. Fannie and Freddie recommend to servicers that they have a 2-year max of keeping the MI on there for dropping it just to amortization. Through appreciation on the appraisal. So I've seen people win that argument though, but they might have to get an appraisal and really be the squeaky wheel in order to get that done. If someone pays down their mortgage, actually pays principal down to be below 80%, you can generally get that dropped earlier than 2 years. Because probably if they're going to go through the process of getting a loan, a lot of servicers offer recasting these days. If they're going to recast it, there's no sense in keeping the MI if they pay it below 20%. 80% loan to value. Yeah, they do look at their credit again. And even though if they put 20% down more, maybe after 3 months after the loan closes, they're going to make them pay it again another appraisal. Even though it's only been 3 months, they're going to have to go out and do it. But if they want to get the MI dropped, it's definitely worth it in the long run for them to do that. I saw one other hand.
On the split edge product, does that MI drop off at 78% the monthly or?
It would, yes. And the monthly would drop automatically as regularly scheduled. But that upfront premium on split edge that I gave you guys is non-refundable. So definitely.
Right.
Yes.
Another selling point.
Yeah. Excellent. One of the last flyer I wanted to tell you guys about, and I pulled it up here. I'm sorry. Oh yeah, is Achieve the Dream. This looks a little bit different. I put that flyer in there. We talked briefly that Radian's done some training, and we did the home ready training for you guys. We've also done self-employed borrower training. We have a fantastic training department at Radian. We have a lot of webinars that are available. If you go to our website at radian.biz and go to training, you can pull up our webinar schedule, usually doing at least 2 to 3 a week. In addition to those webinars, we do live training, and we've trained over 40,000 people nationwide last year. So we made a very big commitment to helping the industry improve as a value-added service. So what does Achieve the Dream have to do with that? Well, we've also decided to take on training borrowers and being available as a resource to you to offer to your clients as an independent third party, a safe harbor that isn't going to steer them back to anywhere else. Because if they go to Google and they type in mortgage, and if they want to type in, a rent to own payment calculator. Well, they might get something from Quicken. They might find out about the Rocket Mortgage. And then you have to answer questions about that. And they might even apply after you've already talked to them. If they go to Lending Tree and find out some other calculators, they might get steered away from you as well. If you send them to achievethedream.com, they can get a lot of great information. We have different loan options. You can see here, you can talk about preparing for a mortgage, talks about how to save for a down payment. They have a beautiful flyer here that'll pull up. We have under the tools section, like I mentioned, that rent to buy calculator. Gives them the question, is it more effective to rent or buy? They type in all the information here, type in their estimated credit score, personal tax rates, closing costs. They can calculate that all for them and let them know exactly what it takes for that. So it's very powerful. It's very in-depth. You see here I have equity and appreciation, the payment calculator, like I said, an amortization calculator. Try and Google amortization calculator and see what comes up, all the different, many ugly options that might just be a spreadsheet. This comes in to be a very, very beautiful, very easy to use system and place for them to go. This website was designed simultaneously while consulting with a number of millennials, and they also had first-time home buyers as they're building it, and they've gone through the whole process. So it's specifically designed for them in mind, and what appeals not only to what they're looking for, but also just to their eye from a marketing standpoint. From the flyer you see as well, it's also optimized for mobile use. So it's really, really nice for them, and it looks really great if you guys have a chance to pull it up on your mobile devices here. The other thing that they have in here that's really great is checklists. I actually had pulled some of these up and they look really great. Like here's a home features evaluation. This is 2 pages and it goes over the community, the location, the home exterior, the home interior, square footage, age of property. They can rate each one of these things and take it, print another one out and go to another property. So when they get back, they've actually had all this, they can all have this data right in front of them. Besides, I'm sure what the realtor may hand them, this is something else that they've actually been able to do on their own. A really nice tool that they can take with them. And I've gotten really great feedback from some people who have already started to use this in some of these checklists. So it's very, very user friendly. And again, like I said, again, it's very designed for that new home buyer and that millennial in mind right now. That's our latest code. Big word is millennial. We could probably do some co-branding. We're always looking to do co-branding. Yeah, we could definitely talk to our.
The Mortgage Assure flyer, we were able to co-brand, so I can talk to them.
Yeah, we can check into that. Would anyone else be interested in co-branding some of these checklists that we have? I see some heads nodding.
Yeah,
See some hands.
heads
Okay. Yeah, they would. We could talk about maybe being available to actually co-brand it. We could send you the thing and you could put your name and type that information in there. We'd see if we have that availability. That's a good idea. I'm sorry? Oh, yes. We definitely.
It's blessed. I think she blessed.
Thank you. Yes. Oh, no. Please do. Yeah, please link up to it. Hey, like I said, if you go through this whole website, you're not going to find something that says where, like another lender's name. We have nothing on it that talks about lenders. I had someone just ask me today, it says find a professional. What does that mean? But if you click on it, go to lenders, it talks all about the safe ways to find a lender. We don't have any steering points. The only thing we do have a link to Zillow on there to compare pricing. So I know Zillow can sometimes get into mortgages related stuff, but we don't have any tie to Zillow. It's just to try and help them find properties and look them up online as another way to get that live data that they typically don't get. It's also Trulia is on there as well as another option. So we can try and give them 2 options there. But we'd love to have a link there. Our company would love to hear that you guys want a link to it. Yes. Any other questions on that? Is that some of the value for you guys? Do you think that'd be great? Yeah.
Would it be okay if you get that comment about shopping around?
And yeah, just put in open mortgage and yeah. Yeah. Well, like we said, we're trying to make it a safe place for everyone to be able to go. But well, it definitely would harm them by shopping around. This way, we keep them in a self-contained bubble that you can say it's independent third party, and it is. It's Radian. And the only place that you ever see Radian here on the website, it's powered by Radian on the bottom. They probably won't even pay any attention to it, won't know what Radian is. But if you want to get in a conversation about MI about them, we definitely would appreciate that. And yeah, and maybe be able to steer them away from FHA. But any other questions on that or anything else, guys? If not, we appreciate your business. We're always looking to try and find more new ways to provide value-added things to the process. MI is this much we know of your life and of the overall lending process of what you're doing. So we're trying to always come up with more ways to help you just grow your business. So hopefully we grow that pie. So one other hand.
Sorry, before I take this opportunity, my name's Tim. I kind of liked it as an option to do some one-time premium, single pay.
Yes.
We've done it over the LTV. You guys will allow us to go over 95 up to 97. It might still be something like 95. Best I know, that's a discussion question for at this point. We ever going to try to get our investors on board without that LTV money to 97 to the base LTV?
Thanks for that.
And we can always pull in our secondary contact if you need some help on finding investors too.
Yeah, we do have a list. We have several investors that will buy it with it financed in there that understand and how to make it work. We can help with that.
I would like to also add that when was the big price
Contract underwriting? Yeah, was that back in August or September? Yeah.
Last year.
Yeah.
That was a while ago.
And Radian stepped in and underwrote, unconventional hospitals to bring up our underwriters, and it worked out wonderfully.
Thank you.
We've always got that now in that pocket.
Yeah. So you guys are protected from that big surge that I'm sure is going to be coming here, as it usually does right around that time.
And they've really staffed up even since then. They've staffed up immensely. So I know we have capacity because they keep telling us they have capacity.
Yeah. Yeah. Thank you, guys. Appreciate it.
Thanks, guys.
Thank you.